Hey everybody, Double P here and welcome. So in today's trading session, we attack the SPY, and this is for my Platinum X Power Option Trader members first and foremost. So the end of the day coaching recall, and then whoever else is on social watching this as I post this on social, you'll understand what we do. So today's trade. It was a very challenging trade, but as I always tell you, my members, yesterday one of our members was talking about taking profit early on and letting some of the contracts ride. And I've always told you guys and girls, like, don't wait for the home run grand slam. If you're up 5%, take 5%. If you're up 8%, take 8%. If you're up 12%, take 12%. When I send out the text alerts, if I say plus 20%, don't wait until you hit 20% because you may or may not hit it, right? Your stop losses, if I say minus 15% stop loss or minus 10% stop loss, don't wait until you hit minus 15% stop loss or minus 10% stop loss or minus 12% stop loss. If you feel as though you want to get out of that trade, get out of that trade and then find another pocket to get into that trade. The worst thing that you can do is sit there and have a trade that is positive and you're in the money, you're making money, then all of a sudden you get sloppy and you're not paying attention to it. Then all of a sudden you're down whatever. And now you're negative when you were positive. That is the classic sign of a beginner trader that they're not following the formula. Like in my classes, in the modules and in the entire course, I tell you, and in emails, I tell you in emails specifically, start taking profit when you start to get up. Like whether it's 2%, 5%, 7%, start taking contracts off the table. So if you only get 2 contracts, well, take 1 contract off the table as soon as you hit 5% or 7%, right? And let the other contract ride. Now, as you're scaling and you're taking 5 contracts or 10 contracts, same thing. Take half or 75% of your profits off the table right away. Whether you hit 5%, 7%, 10%, take it right off. So if I send out a text alert when I say plus 20% and you got 10 contracts, take 10 contracts off the table as soon as you hit 8 to 10%. Take half off the table and let the other half ride. So that being said, let's get into it. So here's my margin account. You see margin right there. So let me come down here because people are asking me 3 years later, still asking me, why does it say partially delayed data there? Well, I'll tell you exactly why it says partially delayed data. Stock is in real time, Amex, New York Stock Exchange, NASDAQ, all real time feeds, right? Equity options, real time. Futures and futures options, I don't trade futures, so I don't need the feeds for it. The feeds are delayed for me, as always, for the last, 3 years, right? Forex real time, others in real time. So full blown margin account right there. So let's get into the SPY. What's the first thing we do? We draw the box, right? Always, always, always draw the box. What is the box? The box is volatility, right? The box is volatility. The box is price action. The box is a volume, right? The box is all of that. This is support and resistance. That's what the box is. We draw it. Right. So when I'm looking at this trade, I'm looking at this trade here in the SPY, and I'm looking at the overall market. I took this trade here for this bearish divergence. And right there, I took this trade for that bearish divergence. I got in early, sent out the text alert to you guys. So let's come over here. Where was the text alert I sent out to you? Text alert sent out 9:33. So I told you to get the 366 strike put. For those on social or wherever else, on YouTube, you don't need to know what we paid for it or the amount of contracts I told them to get. Plus 20%, minus 15% stop loss, 933. So 932, 933, that's when you got the trade alert coming out. So let's come over here to 933. So 932, 933. So right here is when I got into my trade, or even 933, as soon as you got the text, right? Closed. And this is when I got out, right? This is a very quick trade because, again, we're inside of the box. And I've always told you, if you're inside of the box, there's a couple of different ways to do this. You can either not take the trade. You can get spreads. So you're mitigating your risk and you're capping your profit. Or this is the death zone. If you want to trade through it, you can trade through it. You may or may not get chopped up. But the way this was moving, when I took this position, I'm looking at my 200 right here. It's coming down, and I'm looking at the 20. You see it's green. You see it's green right here, and then it turns yellow all the way inside the box, and this is where the 20 was, and it looped right here where it's green. So you see that signal right there. So 933, when am I taking my trade? Right here, and I got out right here. Actually, this candle right here, this is when I got out. So it was a tight, quick 3-4 minute trade. So from here, tight trade. 1, 2, 3, 4, 5 minute trade. And that's all we need. That's all I need. Right? I always tell you, the more you're in the marketplace, the more you leave your capital in the marketplace, the greater risk that you have, because look at what happens. When this turns right here, so let me open this up so that you can see it. Let me open up these candles here so that you can see it. When this signal turns, the 20 turns and it turns green, and the 200 and it crosses, this is what happens. You get gamma squeezed, right? This is a massive gamma squeeze. And I was going to take the call. I'm looking at it, I'm thinking to myself, you know what? Maybe I should go and take the call. Maybe I should go buy the call now and just rip it up, right? So you see right over here, here's the option, the 366 put, right? And like I said, here's my mark, 275. 275 is my profit to get out, right? But I didn't wait for 275. 267, when it hit the high, because you see this candle right here, right? You see it trapped all the suckers in here. So it closed right here, right? And you see it trapped up all the suckers right there. So give me a quick second. My kid is going nuts. Sorry. You're going to hear my little guy in the background. He's just like tripping out, causing a storm here. Let me pause the video again. Hold on a second. It's always when I'm trying to cut videos, that's when my little guy decides to pop off, and he's a little bit of a hurricane. But anyways, you see here, like I said here, 275, it never hit my mark. I got out right at the high, 267, because I know based on experience, that's what I need to do. I need to get out, right? So you see here, this is a massive big gamma squeeze right here. Give me a quick second. Oh, the joy of having children, little toddlers that pop off. So anyways, let's get back to this and let's finish this off really quickly because I don't know how long I got before the little guy pops off again. So that's what you need to do in that situation right there, right? So this was just basically consolidation, then a big, huge gamma squeeze all the way up. So this ripped, like literally, how did this rip? 367. So literally ripped $5, right? So we get in and we get out. 5 minute trade, that's all I need. So you see right here what I made. Don't copy. No, I loaded the boat up here because that's what I always do. And if you're wondering, yeah, I put in anywhere on a normal day. I'll put in anywhere from, well, I'm not going to tell you how much I put in. Like let's just say I put in quite a bit of capital every day when I'm trading. So 4,700 right there. That was my day in and out. Cutting this video a little bit later than what I'd like to, so that's why you see the price over there, 371.75, whatever, doesn't matter, 366. What matters is getting in and getting out and making profits. So that being said, one of the things you need to understand is if you don't have this set up yet, and this is for my Platinum X Power Option Trader members. If you do not have your chart set up yet, I harp on this like every single day. You need to get to 200. You need to get to 20. You need to set it up. You need to draw the box, right? You need to have your support and resistance level, price action levels drawn out. It is not hard to do this. You're looking at a price tool, you come over here to drawings, right? Come over to the drawing tools, and here are all your tools right here. Price action, right? And you need to start mapping out your support and resistance levels, right? And this is also volatility mapping. This is volatility mapping, right? And with your price action levels, right? Map it out. This is what I do every single day. This is the formula. This is what you need to do. If you don't do it, then, that's on you, right? It's inside of the course. It's there. I show you how to volatility map. I show you how to price map support and resistance. I show you how to draw the box. Now, granted, the box is in version 3.0. So those of you that are brand new, you got to work through the whole entire course because that's where it is, right? So that being said, my name is Double P. This was today's trade, and I'll get it out to you. I'll see you in the next trading session. Take care, everybody.